All right, I'm good. We got 2 new folks on. That's all we need. Or maybe 3, because Shay might be there too. That's all we need. So I'm gonna go ahead and share my screen. Now, the strategy that I'm about to use, guys, before I share my screen, the strategy that I'm about to teach is actually taking a candle pattern and using that to get in trades, to find sells and buys. But this is mainly used for pending orders. So drop a 1 in the chat if you aren't familiar with pending orders, such as buy limits and sell limits. Drop a 1 in, should I say drop a 1 in the chat if you'd like me to go over it. Just a quick example. Okay, cool. It only takes 1. All right. So really quickly, I'm gonna go ahead. Cool. 1 second. I'm gonna pull up the little sheet that I like pulling up when I explain pending orders. 1 second. Here it is. All right. Let me share my screen. All right. So pending orders deals with basically you're waiting for price to get to a certain point that you've analyzed. And then once it gets to that point, you are placed in the trade. But you're not placed in the trade immediately. It has to get to the price that you set. So for instance, we have a buy stop. Now, this green horizontal line here is a certain price. And what this arrow represents is the market moving towards that price. Once it hits this entry point, it's called an entry point, your trade order activates and it places you in the trade, just as it would like market X, except for market X, you're manually getting in the very moment you hit sell or buy. In this case, you're going to set a buy stop where you put your entry, your take profit, and your stop loss. Now that entry, once again, is at a certain price. Is at a certain price that you're waiting for the market to get to before placing you in that trade. So you see here that price is just going, it hits and it continues to go up. That is a buy stop. Now a buy limit is where price is selling. It hits this entry point, this particular price that you set, and then it buys off of it. So I'm going to go 1 at a time. Drop a 1 in the chat, or drop a 2 in the chat if that made sense. And guys, this time, the time that I'm spending here with y'all is y'all time. So I want to make sure that you understand. I want everybody to respond to me. There's only like 9 people on here. Okay. So at least I got all the new people responding to me. Good. So it's very important that you understand this and not get confused. So I'm just gonna, because for me, when I first joined, pending orders was a little confusing. So once again, you have this entry price here that you set from some kind of analysis that you've done. And you're waiting for price to hit this entry, activate, place you in the trade automatically, and then you're expecting price from your analysis to continue to buy up. For a buy limit, once again, from your analysis or whatever, you have this entry price here. And what you have first is price selling towards it. You're expecting it to activate and then reject off this entry and continue to buy. It is a buy limit. A buy stop is just the opposite of, a sell stop is just the opposite of a buy stop. So you have this entry here from your analysis, which you're expecting is price to sell, hit this entry, and then you're automatically placed in the trade. But you're not placed in the trade until it hits that entry point. Same for a sell limit is the opposite of a buy limit. You're waiting for price to sell off a specific entry, but first it's going to buy up to it, activate, put you in the trade, and you're expecting from your analysis for it to reject off and start selling, which is exactly what it shows here. So from that, hold on, let's see, what a chat at? I'm gonna find the chat first. Ooh, I didn't lost the chat, guys. I didn't lost the chat. Does anyone see me fiddling around over here trying to find the chat? Anyone see that? Oh, there we go. Drop a 3 in the chat if that makes sense for a sell limit and a sell stop. Cool. Okay, so since that makes sense, the 2 pending orders that we're going to focus on for this strategy, this teacup strategy that I'm about to tell you, is the buy limit and the sell limit. So I'm going to go over a inverted teacup and a regular teacup. But first, I'm going to go over the regular teacup first, and that's just usually called a teacup. So the first thing for a teacup, what you want to do is you want to recognize the pattern. So in order to recognize the pattern, you have to, look at it. You have to look at your chart and put it in candle form if it's not already in candle form. And what you're going to be looking for is a bullish candle. So a bullish candle equals a buy candle, a candle that is buying, followed by a bearish candle, which is a bearish candle equals a sell candle that is aligned with the bullish candle. So you see that the bodies of the candle are aligned. So that's your first step. The second thing that you're going to look for to solidify that this is a teacup pattern is a third candle, which should be bearish, below the previous bearish candle. So I'm going to say that one more time. You have a bullish, followed by a bearish that is aligned with the bullish, followed by another bearish that is underneath the previous bearish candle. So I'm going to give you all a few seconds to screenshot this or take a picture of it. And let me know if I need to repeat that. So once again, bullish, followed by bearish, followed by another bearish aligned underneath the previous bearish candle. So now that we've recognized our candle, our teacup pattern, so this is a regular teacup, we're going to come over here to our handy dandy tools. Now I'm using this on a site called TradingView, and that's just because I like it. I can see it without the harmonic pattern, but you can definitely apply this on your harmonic scanner. What you're going to do is you're going to take your horizontal line and you're going to line it with the bodies. Now, because these wicks aren't so long, I'm saying align it with the bodies. But you could, if you wanted to, because they're a little bit long, you could bring it up so it's in the middle of this wick here. So you could put it at the bodies or the middle of the wick. And what this horizontal line now becomes is your entry. So a teacup, what we're looking for a teacup is for price to come and it's going to buy off of this area, and we're looking for it to come back up, hit this entry for a sell limit, and sell off of it. So I'm going to go ahead and show you what I'm talking about. I like using this little pattern here. So you have, it's not going to actually look like this nice round shape, but basically in theory what's happening is that it's coming around, and you're going to expect it to come all the way around, hit this area, and sell off of it. But what's important before you can determine whether it's going to sell off of this area is how strong this teacup is. How strong is this teacup? And this is where the key thing about a teacup is it shows you support, it correlates to support and resistance. So for a regular teacup, it's actually showing you a strong resistance. In order to have a strong teacup pattern, you have to have a strong resistance. In order to have a strong resistance, price needs to respect this zone here, this line, this horizontal line that you put 3 or more times, or multiple times. I mean, the more that it respects it, the stronger you can believe that this is a strong teacup pattern. And when I say respect, I mean where it bounces off and rejects off of it. So it'll try and buy, but it'll sell. Like it cannot break through. Or if it breaks through, it's drawn back to it. And then once again, it bounces around this zone. And so before I move on and show you that, drop a 1 in the chat of just that little bit makes sense. Or if you want me to repeat anything. I got 1. Repeat it, please. Great. So basically, once again, you're going to establish, okay, what you're going to do is you're going to establish your pattern. And what corresponds between a teacup is its resistance. So that entry zone for your teacup, because this is a sell limit, is actually a resistance line. It acts as a resistance line. Now, the stronger the resistance, the stronger the teacup pattern is. The more likely you can say, okay, yes, this is definitely going to sell off of this teacup pattern here. So how do you determine that is how many times price respects or bounces off or around this entry zone, which is actually a resistance line. Does that make sense? Yes, cool. So let's get to it first. So now we need to see, okay, well, we have this teacup, but how strong is it? Well, let's look. If I take my eclipse here, I can see that price was respecting it around here. Let me get it here. Price was respecting it around here. Price respected around this area. Price respected around this area. This area. I mean, looks like a pretty strong teacup to me. If I go further, history repeats itself. So you'll know that it's a strong resistance when you look further in the past to see how many times price respects it. Me, I like to look a little further. Even though it might respect it, 3 or more times, I might still go back just to really solidify, like, oh yeah, this is respecting this area. Y'all see that? Or do y'all see exactly what I mean? Drop say yes or drop a 2 in the chat or something like that.
Yeah.
Yeah.
Cool. Okay. So the more that price respects off of this entry zone, the stronger the resistance, which correlates to the strength of the teacup pattern. So you can be like, okay, well, this is rejecting, price is rejected off this so many times. It is likely that price is going to come up and sell off of this area before breaking through. And so what's really cool about teacups is that you can set a bunch of different teacups because they're not going to activate at the same time. And you can have teacups within teacups. So personally, what I like to do is have a same broker, but a different account under my broker for just different strategies. And so having having an account that's funded just for pending orders. So just for things like, the teacup or the regular teacup is what I like to do personally. So one would wait until it comes back up. I mean, this is a viable trade, by the way, guys, if you wanted to put this in your demo. But the thing is that this is on a daily, so you can't expect that this is going to take some time before it activates because price is way down here it's going to go through other structures and other patterns and other teacup patterns and sell off and buy off and different things like that before it makes its way up here. So the cool thing about teacups, once again, is that you can have a teacup within a teacup. So let's see if we can find one. So I see a few. So I like this one. This one hasn't been tested yet. So once again, you have this right here where you have price. You have this bullish candle followed by a bearish candle, followed by another bearish candle that is below the previous bearish candle. Let me know if y'all see that. Let me know if y'all see this pattern right here.
Yeah.
Okay, cool. This is your regular teacup pattern. Now there's actually many other teacup patterns, but I'm showing you the one that's most commonly seen within this within the markets. So once again, you'll come, and not, like I said, not every teacup is going to be a strong teacup. Sometimes price will disrespect teacups, and that depends on how strong that teacup is. And the strength of the teacup depends on how strong your entry line, which is actually a resistance, is tested. So once again, we can look, we say, okay, we have this pattern here. We can see how many times his price respected off of this zone. So you can see that price respected here, 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 this area, and these areas here. So you can think, oh, okay, cool. Price pretty much respected that pretty well. And then you can, once again, set your limit, set your sell limit. And so now you have a teacup within a teacup. This teacup is going to activate before this teacup. So this teacup is going to activate, come and sell off of this area here first before breaking through and coming up and selling off of this area. Does that make sense?
Yeah, it does.
Cool. Drop a one in the chat. Drop a one in the chat. Drop a one in the chat if that makes sense, guys.
I have a quick question.
Go for it.
So, I know you said we're supposed to look at the green resistance line, but also, you know, like the green, like the shaded green. Do we like pay attention to that as well?
This
Like
thing
that?
here?
Yeah, like that green.
Oh no, this is just me giving you an example of the teacup, because what you're looking at is price to come around and then up and then sell off of it.
Oh, okay.
Yeah.
All right, yeah,
So you can kind of think of it as a teacup because it looks like a cup, and then a teacup usually have a handle, and so the sell off point is the handle. That's the analogy.
Oh, okay, I get it. Okay. Thanks.
Gotcha. Of course. So you're expecting price to come up and bam, hit and then sell off of it. And so, you know, the same thing could happen. Let's see here. So this sold for like 56 pips. This is another teacup pattern right here. So you have the bullish candle, followed by the bearish candle, followed by a previous bearish candle, followed by another bearish candle below the previous bearish candle. You'll take your horizontal line, you'll align it up. You'll see how many times price has respected, you know, off this is an area. So we can see, okay, it's already respected here in this area. It's respected in this area. You're respected in this area. So we go back and we look and we're like, okay, what did price do? Price came up, it tested it. It had a drawdown of like 21 pips, and then it sold for like 50 something pips. So you would have activated here. It would have activated here. It had a little bit of drawdown, about 20 pips or so, but it sold for 56 pips. And then it came back, it tested it again, it sold off of it again, and finally it broke through. Drop a, let me see, what numbers have I used? Drop a 2 in the chat if that makes sense. Drop a 2 in the chat if y'all see that. Drop a 2, 2, 2. Awesome. I got 2 2s though. Let me get some more 2s. Let me get some 2s and let me get some questions. Hello. I got Chris, I got Destiny, I got, well, we already know Mel knows it. We got Shay, and we got T already said something. So guys, does this make sense? Or do y'all see that? I'm very impatient. I'm just move on. Oh, okay. Cool. I'm gonna go ahead and move on now. So unless y'all have questions, then I'm not impatient, but I'm impatient when it comes to like waiting on people to respond. That's crazy. Yeah, I should be plugged in. So let's go back. And I saw a beautiful inverted teacup example when I was showing y'all the cell example. So I'm gonna go back and I'm gonna find it. Here it is. This is it. This is it right here. Okay, so I'm gonna get rid of this green line here. I'm just gonna move it. Now, let's get into what a inverted teacup is. So just like your regular teacup was for a cell limit, your inverted teacup is for a buy limit. And it is the opposite. It is just the opposite of the sell limit. So what you're going to have is you're going to have a bearish candle. Remember, a bearish candle is a sell candle. You're going to have a bearish candle followed by a bearish candle, followed by a bullish candle, followed by another bullish candle above the previous bullish candle, but a line underneath it. So once again, you're going to have a bearish followed by a bullish that is aligned with it body to body, followed by another bullish candle underneath the previous bullish candle. And I'm going to go ahead and I'm going to highlight that right here. Now, tell me if y'all see that. Drop a 1 in the chat if y'all see this, if y'all see the inverted teacup pattern. I got a 1, I got 2 1s from Dom, a 1 from T. Do I only have Dom and T plugged in with me? All right, if that's the case, I'm gonna keep pushing, but it's for you too. So if I go ahead and okay, Destiny, I see. All right, you better start responding. I'm not playing with you. If I'm going to turn this to a different color, a blue color. And I'm going to align it here. The wicks are kind of long, so I'm going to put it in the middle of the wick. I'm going to put it, so when the wicks are kind of long, you place it in the middle of the wick. If they're short, you can place it at the body. We're going to place it at the middle of the wick so we can reduce even more drawdown. And now what I'm going to do is I'm going to look to the past to see how many times this was tested. So, I mean, first of all, right next to it, it was tested. It was tested. Let's see how many times it was tested. I mean, sheesh. It was tested, tested, tested. I mean, y'all see that, right? This has been tested multiple times. Ooh, whoa, I wonder what happened here. This is October 16. Whoa, that's crazy. Look at this, guys. This is like a W. So it was tested more recently close around where this price is, but it was still tested 3 or more times. So that is okay. So say we get into it. Now let's see what happened. I'm gonna go ahead and I'm gonna grab my my arc. I'm gonna line it up with it. I'm gonna bring it down. And what we're looking for is price. Ooh, we're looking for price to buy off of this buy limit, because what we have is price is going around. It is selling towards the entry and it's buying off. We want it to buy off the entry. That's what we want. So we want price to sell towards it and then buy off of it. That is what a buy limit is. And so, I mean, what do we have there? Lord have mercy. Price hits the entry. Let's look at how much drawdown there is first. You got a 21 pip drawdown. 21 pip drawdown. And let's see how much it bought for. Let's see how much it bought for. We have it here. It bought 555 pips. Does anyone see that? Please somebody let me know that they just saw that this teacup activated and bought over 555 pips with only like 21 pip drawdown. Please somebody let me know.
We lit like Bic.
So let's say T said, so we follow the curve, the cup, and then it goes up. So you don't have to follow it. Price is going to be drawn back to that entry because it is a strong resistance. So all you have to do is set that limit, because you're not going to know when it hits. You're not going to know that it actually is going to hit here. But what you do know is that you have an inverted teacup pattern, and the entry has been respected multiple times, which is your support. So your regular teacup acts as a resistance because price is going up against it and selling off of it. Your inverted teacup entry acts as a support because price is going down upon it and then rejecting off of it and buying. So you're saying, okay, I recognize that I have this inverted teacup pattern with a strong support entry, and then whenever price gets to it, you're expecting it for it to buy. Does that make sense, T? Yes, cool. That is crazy. 500 and some pips. I mean, you had to wait. I mean, this right here was a swing trade. Most people wouldn't be patient enough to let this trade go as it did, because from this to here, it says it took 13 days to get to that amount. So I would have been one of them people, because I'll tell you what, if I would have saw this right here is a potential regular teacup pattern. So I would have had to see, okay, how many times it priced. Like there was some strong momentum though, because it completely disrespected this regular teacup and just kept buying. But then it came back and that regular teacup was respected here, right over here, because it aligns with it. It hits this entry and then it sells back down to this entry here and then buys off of it. So Eventually this was respected, but at this point in time, it was totally disrespected. Totally disrespected. That's crazy. Let me see. As long as it's going in the direction I want, I'm in that. Yeah, Dom. So that, I mean, and then let's look at the next one. Here's another inverted teacup pattern right here. Let's look at this one. We have the bearish, followed by the bullish, followed by another bullish above the previous bullish candle. And it falls right on our, we know that it falls right on our entry because it's a reaction off of this previous teacup here. So price came around, it did its thing, it came back down, it wicked here. So you would have gotten, and it would have entered in here. This is where it would have activated. It would have came down a little bit more. Let's see how much it would have came down some. Sheesh. Oof. It would have hit your stop loss with this crazy wick here. I don't know what happened on August 17th, but this would have hit your stop loss because, I mean, unless you had a large stop loss for whatever reason, usually my stop losses are like 50 pips at the most. So it would have at least hit my stop loss. But this thing turned around, rejected off of it, and then bought. Let's see how much it bought for. Oh my gosh. So it would have wicked some orders out, and then it would have just bought mad hard. It would have bought 910 pips. Y'all see that? Tell me y'all see that. I would have been mad as hell, I'm gonna tell you that. Personally, me. Because it would have whipped me out of, it would have caught me out my stop loss, and then it would have bought like that, mad crazy. But I tell you what, I would have found me another entry. But yeah, so basically these are pinning orders. You can do this on any time frame. You can do it on the 15-minute. I've seen teacups respected on the 15-minute. I've never tried it on the 5 yet, but you can do it on the 15, the 1 hour, the 4 hour, the daily. And I've never gone above the daily, but you probably can do it on the week and monthly. I mean, the stronger, because teacups act as a support and resistance, and not only a support and resistance, but a strong support and resistance. The higher the time frame, the higher the support and resistance. So that's how, it'll react off of your, it'll react well off of your higher time frame support and resistance. So just to tell you what the side, so this is what the general, this is what it generally was before COVID time. So I don't really like giving this version, but I'll tell you. So what it used to be was your stop loss, no matter what the time frame was 30 pips. But the times are so volatile now that it doesn't really make any sense due to COVID. For your 1 hour, you were looking for about 25 to 30 pips. But like I said, things are volatile. So you might can even catch even more than that. For your 4 hour, you were looking for like 40 to 60 pips. And for your 1 hour, you're looking up to 100 pips, plus. So drop a 1 in the, don't even drop a 1 in the chat. Let me know. Let's see, I should email the link to, okay, I don't know what that's about. But let me know if y'all have any questions. Y'all can literally pull this from your harmonic scanner, find a bunch of teacups within teacups on whatever time frame, and you can watch them activate. But what I strongly suggest is that you be sure to test any new strategy out in your demo. I would test any new strategy out in your demo. Another thing the last thing that I want to leave off with is your EMA, your 50 EMA. You never want to get inside of a teacup if it's coming up against your 50 EMA. On at least on smaller time frames. On this it might be okay. But on smaller time frames, it could act as a form of resistance, causing you to not get in it just yet. So what I mean by that is, say for instance, actually I don't have a good example right now. Oh, no. Well, okay, pretend that this was this is a teacup right here. So say you had a teacup right here. Now this is actually this is a good teacup here. Why? Because you have this going, you have this resistance, the 50 EMA acts as a resistance, and it's pushing up against it. So I would expect to sell off of this teacup here, also due to the fact that this 50 EMA is here. But say that your 50 EMA was actually below here and you were waiting for price to like come up, then it might not reach your teacup. You would have to wait for it to break through. And if it breaks through that 50 EMA, you're gonna probably most likely have a lot of momentum to the upside. So it's gonna disrespect your teacup. Does that make sense, guys? Or do I need to repeat that? I feel like I need to repeat that. Let me know. Repeat, cool. One more, gotcha. So you have this regular teacup pattern here. Now, why I think that it'll be fine with selling off of this regular teacup pattern is, well, one, I need to go back in time, see how many times the entry would have been respected for as a resistance. But two, I have this 50 EMA right here. EMA, it means exponential moving average. It averages 50 candles, continuously in this EMA. And what happens is it acts as a support or resistance depending on its price is above or below it. So right now it's acting as a form of resistance along with the resistance that's already happening due to this teacup pattern. So that's why I believe that this will sell off. But if this EMA was below this teacup pattern and price was below this teacup pattern, you might not want to get in it. Why do you might not want to get in it? If it was like right below, I say why, because if it breaks above that 50 EMA, you're going to have most likely, because that 50 EMA acts as a strong resistance. If it breaks above that 50 EMA, it's most likely going to shoot to the upside. It's like the same strategy with the MA cross. The MA cross uses, well, before they updated it to all the other things, it used to just be the 50 EMA for, and the 4 MA, the simple moving average. The 4 moves with the candles. The 50 acts as a support or resistance. And to give you an example here, the 4 EMA, if you had a 4 EMA, it would be right here along the candles. So pretend that you had like a line, an EMA going through here. This is a point in time where the 4 would cross the 50. Anytime the 4 crosses above the 50, it's most likely going to buy. And you see that that's what happened here because it has strong momentum once it has broken that resistance. Same instance here for this example right here. When the 4 EMA crosses below the candles, it's going to have a strong sell momentum, which is exactly what happened. So what I'm saying is, if you ever come across where your 50 is just below and your price is below it, if it decides to break through that 50 EMA, I would cancel out your pending order, just because I would just cancel out that pending order just because if once price breaks through it, it's likely to continue to buy and disrespect your regular teacup pattern because you're expecting for your regular teacup pattern to sell off of it. Does that make sense?
Yeah.
Cool. Who else I got?
Yep.
Cool.
Yeah.
Awesome. Cool. Well, then that's all that I have, guys, for today's training. I don't want to keep you long. We do have another training at 5 that y'all can catch. Let's see what it is. So the training at 5 is alligator strategy. I love the alligator strategy, y'all. So if y'all want to hop on that, I would definitely check out the alligator strategy. And yep, but that is all that I have. If y'all have any questions, please feel free to message me. And I am very accessible to everybody here. So let's get it. Let's run it up. Let's continue to move. All right, guys. I'll talk to y'all later. You're welcome.